We're back. It's April 3rd, 2020, and this is our weekly housing market update. The past week has been crazy with the passing of the federal stimulus bill, the closing of all schools for the rest of the year, and the current stay-at-home order by Governor Ducey.
As you probably know, pretty much everyone has been affected by the COVID-19 outbreak, but surprisingly, the housing market is still doing well. Housing appreciation has increased 8.6% since the beginning of the year, and that number was expected to continue to rise due to the insane demand for housing and extreme lack of supply. This being said, there are two main factors that are going to affect our market in the weeks to come.
The first factor is the increase in supply or active listings on the market. A major reason our market has been so hot is due to the extreme lack of supply that we've had over the past year, and especially the past few months. Just in the past 2 weeks, there has been a 20.5% increase in active listings in the Phoenix metro area. While this seems like a big increase, we are still 54.4% below normal in terms of supply. This major lack of supply goes back to the 2008 housing crisis, when many builders went out of business. Since the market has started to recover, builders are not building nearly what they were in terms of single-family housing. Many are focusing on apartment buildings and condos. With the influx of people moving to the Phoenix area, we have a greater need for housing, and building is just not keeping up. The major factors for this 20.5% increase are due to Airbnbs and short-term rentals going onto the market since they aren't being rented, and also iBuyers such as Opendoor, Redfin, and Zillow no longer purchasing homes. If this continues, this is good news for buyers because they will have more to choose from than they previously did. It has been hard for buyers since we've basically been in a seller's market for the past few years. So buyers, this could be your chance to get into a home.
The second factor is the lack of demand. Demand for housing has definitely taken a hit. There have been contract fallouts, fewer new contracts getting signed, and fewer sales closing. With contract fallouts, we normally see about 400 to 500 per week. We're now at approximately 700 to 900. Some of this is due to coronavirus fears, but much of it is also due to mortgage issues. With everything going on in the economy, funds for mortgages are hard to come by. To address some of those issues, some mortgage companies have made qualifying for a loan more stringent.
The bottom line is, although we are seeing trends moving towards a more balanced market, home prices are not expected to go down in the immediate future. What we're expecting is for buyers to gain some ground in negotiating with sellers.
Most likely, people will start fixing up their houses before putting them on the market. Then we'd start to see sellers offer concessions, such as paying for buyers' closing costs. And finally, we'll see price reductions. Price reductions are still historically low, and these changes with supply and demand would have to continue for several months before we start to reach a balanced market, never mind a buyer's market.
Thank you for hanging out with us. We will continue to keep an eye on our market and report back again next week.